Welcome to the show. Here, I speak with experts and experts at life in heartfelt conversations designed to help us pause, choose intentionality over hustle, and discover joy, meaning, and connection in our everyday lives.
First and foremost, don't go for non-regulated entities. And if you look at non-regulated, they promise you some sky and then you may end up in a problem.
Yeah.
You may not forget about getting the interest, we not get the principal as well.
Right.
So it's the first thing is look at the regulated entities. Second most important thing is we need to set our goals. Is it for the child education? Is it for my own education? Is it for the vacation? Is it for the purchase of the car or a house? Or for my retirement. The satisfaction that you get from serving to the customer is immeasurable.
Right.
And that is one organization where I could finance 5,000 rupees and 5,000 crores as well. Small buffalo in a small village and a Boeing in US. We were very passionate. We used to go to the small villages, finance IRDP loans, buffaloes, bullock carts, used to finance small kirana shops and then see to it that these people repay and take a better loans.
Right.
So when these people are prospering and when I can make a small change in their life, it gives them a satisfaction to us.
Right.
And that satisfaction is what is driving me even today. While the technology changes have happened, we have seen many events happening. And whenever such changes happen, there is a creation of jobs.
Right.
There would be creation of alternate jobs are definitely going to be created. All that is important for all of us is keep learning.
Right.
Learning is a continuous process.
Right.
And we should keep ourselves abreast of the latest happenings. As long as you're keeping ready, it doesn't matter whether you lose one job, but there is something else which is ready for them to pick you up.
Thanks so much, Venkat sir, for making the time for us. Given your vast experience in the banking industry, I wanted you to share your perspective of India from two different angles. One is, what is your view on the Indian economy in the long term? Why I ask is because when we were growing up, there was a lot of brain drain. People wanted to move to the West. But if you think about young folks now who want to make their career and their life, for them, what do you think the prospects of the Indian economy are with respect to the overall world?
First of all, it's a real pleasure, Rhitu, to be a part of your podcast. Thank you for making a part of it. India growth story is known to the entire world. India is one of the fastest growing emerging markets in the world today, as we speak now. And this is a large economy, and we are on par with Japan now. In decimals, there is a small difference between the two. And we are likely to surpass and become the third largest economy now. And as you know, we are looking towards becoming the developed world by 2047, which is a dream of the Prime Minister. The reasons for this growth is very obvious. One, you have the macroeconomic situations are pretty good. The twin deficit, be it current account deficit or fiscal deficit, both are under control. All the current account deficit is going to have a small ups and downs because of the latest tariff issues.
Right.
But however, overall, if you look at it under control, inflation under control, infrastructure that is being developed both on the physical and digital is something which is phenomenal growth is happening.
Right.
Entrepreneurs are going pretty fast. Service sector is doing extremely well. And the world is also looking for China players. So all these are very, very positive factors. So we are expecting the growth story to continue on a long-term basis. Now, given the point that you mentioned about the brain drain, which was there during my generation and your generation also, is because people look towards going to a developed economy.
That's right.
And the developed economy has its own advantages, be it in the form of infrastructure, be it in the form of spends, be it in the form of your next generation education, etc., etc.
Yeah.
So they have the advantages there. And of course, the higher salaries. Therefore, we have seen that migration happening. The best of the people used to migrate to other parts of the world. Now that our economy is moving towards a developed economy, and then there is a distinct improvement in the infrastructure in all other areas, I would see that instead of brain drain, there will be a reversal happening, while the people who have gone overseas will be coming back. And not only that, it can be a different way. It can be a brain attraction towards our Indian economy. There'll be more and more people can come towards India and try to serve. So that's a reversal we'll start witnessing, because India is going to become a developed economy.
Also, the other angle that I wanted you to share some insights on is how do Indians deal with their money when we look at our investment practices versus our global peers? Where do you think we stack on financial prudence?
I think the annual report, RBI annual report, has come out recently. It talks about the saving pattern of the Indian people. We find that even as we speak now, 44% is going towards real estate and 22% is going towards your gold. And even in the remaining portion also, the majority of it goes towards the banking deposits. And some small portion is still held in the form of cash. So what we are trying to look at is, are we creating assets, holding of assets, which either do not generate income on a regular basis, while there is a probability of growth, but you do not be generating the required income on an ongoing basis. And these assets that you're holding would not generate income for the country as well.
Right.
So there are two areas that's going to have an impact. And therefore, the financial assets is something that is extremely important. There are two data points that I would like to tell you. One, the drive that happens by having a proper planning, investing and all this, and ensuring that you get a better returns on your investments is driven by the financial literacy. And in India, again, it's the same data point that the same data that has been released talks about financial literacy to the extent of around 30% in India, and therefore the proper investments are not being done. And second important data point, again, I would like to mention, which is linked to our industry, is a mutual fund industry. We are proud to see that the growth in the mutual fund industry is phenomenal, and our AUM is approximately around 20% of the total GDP. It has gone up substantially. Phenomenal growth is witnessed during the last 5-6 years. But having said that, if I compare with the global average, it is around 65% of the GDP. And if you look at the developed world, which we're talking about, where we are aiming to become, it is more than 100% of the GDP is under assets under management. So these are the two data points: financial literacy and your people's investments into non-financial assets is something that needs to be changed.
Before we go into more details about what you said, I would like you to sort of talk a little bit about how you think being financially secure is linked to overall well-being.
See, financial security is a very important point. The one word that has come into significance is resilience. You know, something which is be it in the form of any corporates, be it in the form of risk, or be it in the form of financial resilience. It's something which is extremely important for everyone. For us, when I talk about security, which you pointed out, is something that I need to have the funds for exigencies. I need to have the funds without borrowing, without getting worried. Any exigency that happens, anything that is there, which happens suddenly, which we witnessed during COVID. And so I need to have the funds to secure myself so that I have a good sleep and then say that, okay, any problem, I have enough money to take care of myself. And that is something which is extremely important. If I don't have that money, and if I had at that point of exigencies, if I need to run around to secure myself and save myself, that spoils my sleep. And in turn, the financial well-being that you talked about is going to have a distinct impact on it.
So you spoke about some of the numbers of how we save versus the world saves, and like you said, most of it is now, let's say, sitting in assets which are not that dynamic, if I can call it, like real estate or gold. What do you think are the barriers that are preventing more Indians from getting into investments that will give us better returns?
See, the more important is we have a habit of savers. The second important thing is we have attachment to these particular assets. And third important thing is we do not know. We think that investment is speculative in nature. Fourth, we do not have the habit of setting a financial goals for ourselves, doing a proper planning.
Right.
There is a distinct lack of financial literacy, financial knowledge among the people. While we are literates, there are more than 70 to 80% of the population is literate. Financial literacy is something that where people are not way forward. Like the data points that I talked about, only 30% of the people are financial literates. They do not have the proper planning.
Right.
People think that keeping a deposit is the safest thing because it is liquid, it is secure, it can be, and it is accessible at any point of time.
Yeah.
And you get certain small rate of interest.
Yeah.
But people do not understand that does it beat inflation?
Yeah.
Does it gives you return even after the taxation? Those are certain things which people do not look at.
Right. So, how can one approach sort of getting over these barriers? What is AMFI doing, for example, in other industry bodies?
So it's a financial literacy. I mean, that's a more point that which I was talking about.
Right.
Is a financial literacy is something that we are trying to spread. Investor awareness and financial literacy is something that we are very passionately doing it. We have various objectives for the AMFI, and one of the most important objective is this.
Right.
And one thing that has happened, which is very, very clearly different from other global mutual fund industries, is SEBI has instructed that out of the total assets under management, 2 basis points is required to be set aside for the purpose of investor awareness and education programs.
Right.
That's step number 1. Step number 2, what they did is, they also asked these asset management companies that to transfer 1 basis point to AMFI so for the purpose of financial literacy and investor awareness education programs across the country. So AMFI is doing it as AMC agnostic and trying to propagate this financial literacy. And we are doing it in 2 forms. One through the digital format,
right,
and the second through in the form of offline, going to the colleges, schools, universities, conducting programs across the country. And you would have seen the way in which AMFI had started off in 2017-18, when this particular 1 basis point started moving towards AMFI. We started a program called Mutual Fund Sahi Hai.
right.
And what we have done is we have done simple things. We have not complicated anything. What we have done is we have said that the mutual fund industry has come into existence from 1964. That was a time when UTI has come into existence.
Right.
And then subsequent to that, many public sectors also, banks and all have started the mutual AMCs in late 1990s, and the industry developed. But what happened, it was restricted only to the corporates.
Right.
It has not percolated to retailers.
Yeah.
People thought that this is only for the high net worth individuals and corporates who can do these investments.
Right.
But this mutual fund Sahi Hai campaign, what has happened is, it has demystified the language and the jargons that we are using, be it in the form of net asset value, be it in the form of SIP, everything has been made simplified and explained to the people. And the content was also, we were ensured that the content and the people who could communicate, or the people who can communicate, are the right people. And because of this, the campaign has become extremely effective.
Right.
On one hand, as I said, Mutual Fund Sahi Hai campaign ensured that we could reach to the masses. And second, the offline programs. And third, digitalization. Fourth, of course, the more importantly, demonetization that has happened, where people had moved into the technology front and people started using technology.
Right.
All these factors helped for the phenomenal growth in the mutual fund industry.
So you were talking about a time when people thought it is only for HNIs and corporates, to now when I look at investment as an option, there are just so many options that sometimes it can lead to choice paralysis. You don't know what is it that you should sort of invest in. And the other angle is that maybe people don't know who to trust with their investment, because I as an individual may not have the expertise to figure out what is the right way to go forward with my investment. How do you think one should sort of solve these issues so that the inertia that's there from investing, that can be sort of gotten over?
See, first and foremost, you invest only in regulated entities. There are strong regulators like RBI, SEBI, IRDA, and PFRDA. These are the regulators that are there. Any institutions that are being regulated by these 4 regulators, they are the ones where we can invest. Be it in the form of banks and by Reserve Bank of India, or mutual funds, or in equity markets by SEBI, or in insurance by IRDA, or by your pension funds and provident funds by PFRDA.
Right.
They are very clear on this.
Right.
Now, don't go for non-regulated entities. And if you look at non-regulated, they promise you some sky, and then you may end up in a problem.
Yeah.
You may not forget about getting the interest, we not get the principal as well.
Right.
So it's the first thing is look at the regulated entities. Second most important thing is we need to set our goals.
Yeah.
What are my goals? For what is the purpose for which I am doing this investment? Is it for the child education? Is it for my own education? Is it for the vacation? Is it for the purchase of the car or a house, or for my retirement? Or is it for my health issues? I need to set my goals properly.
Right.
Once I set my goals properly, then look at what are the products that are available. See to it that whichever product that is suitable to you, you'll have to plug in and use that particular product. So you need to dissect and then do it. Yes, there is a proliferation of so many schemes, so many products, which confuse us.
Yeah.
But once I do this particular dissection and say that this is what my goal is, this is what product that goes to fit to me, what is the tenor for which I need to invest, what is my appetite, am I a conservative player, am I an aggressive player, am I a moderate player? Accordingly, you keep your investments. So you need to see to it that everything matches, and then you go ahead and do your investment. And that's where financial literacy is going to be a great help.
Are there any resources that one can look at?
Financial planners are there, RIAs, registered investment advisors are there, who will be in a position to advise you to what investments are required to be done. So there are 2 types. One, in respect of mutual fund industry, we have distributors,
Right.
but then they don't give you a direct advice to you. We have RIAs who give advice, but they charge to the investor.
Right.
That is how the model is. So you can look at either way. If you're looking for advice on an ongoing basis where these people need to be done, you can approach an RIA. A distributor can only tell you look at your risk profile and tell you what products are available. Ultimately, the decision for you to invest will have to be your own.
Got it. You spoke about a few goals, right? If I think of somebody like me, there are 2 sort of big goals that loom large, maybe 3. One is, how do you think of ongoing health costs? Of course, there's insurance, but any other rules of thumb that you have for sort of making sure that, the health of me and my family sort of secure?
So one important point that you already mentioned is insurance.
Right.
That is something which is extremely important.
Right.
Insurance is like an option, we pay a premium and then don't exercise it. You be happy with that. That's the happiest person is the one who do not exercise it, but you have a protection.
That's right.
Be it in the health or be it in the form of life insurance. This is extrememe important. And but for your goal setting, once you have your goal that you have set for yourself, be it in the form of a home planning, or be it in the form of retirement,
Right.
which most of you youngsters would not even plan for that.
Yeah.
You think that retirement is something that I need not look at it.
Yeah.
But trust me, today as we speak now, you need to plan for a retirement, because we don't have the pension which I'm getting now. I get a pension from my parent organization, and that can take care. But what is it required? At the time of retirement, you need to see to it that whatever comfortable life that you're living in,
Right.
the same life you should live later. That's point number 1. Point number 2, the survival rate also.
Yeah.
Earlier it used to be used to survive for 10 years. Now the survival is going to be more than 10. It can be 15, 20 years post-retirement.
Right.
That is a time where your expenses will be there and there is no income for you. So, and the thumb rule should be there should be some emergency money. While you do your insurance, you should have some money for the emergency, which I talked about right in the beginning about the financial stability, financial security.
Right.
So you need to have some emergency money, maybe 6 months expenditure we should have. And we should also look at how much money that I'm going to have which will generate every month at least 80%, 70 to 80% of the income that you're having in the last pay salary. So that is something that you need to get on an ongoing basis,
Right.
regularly, and you'll have to take care of the inflation that's going to happen.
Yeah.
So your saving by the time you retire should be so much that on every month you will be in a position to draw from those savings, which will be equivalent to 70-80% of your salary, which your last draw, and that takes care of the inflation as well. So we need to factor that, and more importantly, as I said, you need to have some contingency fund over and above an insurance as well. So we need to plan properly for our retirement right now.
Right.
And don't say that retirement is going to happen after 30 years. But one thing, the day we join the organization,
Yeah.
you know that we're going to retire on a particular age.
That's true.
And there is another trend that I'm witnessing now in the younger generation is that they don't even wait for the retirement age. They try to retire even much earlier.
That's true. That's true.
So for that, you need to secure yourself to ensure that your longevity, which of life for which you're going to live, is secure by getting more money.
Yeah. You also spoke about home loans. If you think about living in a city like Bombay, buying real estate is really expensive. And of course, buying a forever home is not just a financial decision, it's an emotional decision as well. What is your perspective on buying versus renting in the context of the fact that it's really, really expensive?
One important thing that you need to look at is you need to look at a trade-off. It's an emotional decision, as you rightly said, is absolutely right. You feel like staying in your own house, and that's you get emotionally attached to that particular house. There's absolutely no doubt about it. And we come out from a culture where, from our parents, where they say that house is very extremely important. House and gold is something that is required to be held. But having said that, you will have to look at the trade-off between your EMI and the rental that you're paying.
Right.
If you're taking an X amount of loan for buying a house, then what is the EMI that I'm going to pay?
Yeah.
Is the EMI going to be more than the rent that I will pay for a similar house which I'm going to stay? If that be the case, if the trade-off is very clear, your rental is going to be less than the EMI, it's preferable to stay in the pay rent and continue with it. Having said that, there can be EMI can be slightly higher than the rent, but overall you're going to have an asset for yourself after you pay the entire home loan, and therefore preferably you save in the beginning to have a better margin when you buy a house. And for that, you can have either a recurring deposit or an investment which will beat the inflation, at the same time get you a better return to keep as a margin money. So set the goal there so that margin money will come, and then you buy a house, the EMI will be less than the rental that you're going to pay, and you can acquire a house as well.
So by margin, you mean the down payment amount?
Down payment that you can do.
Understood. You're deferring back to parents quite a bit, and of course, again, for someone from my age group, managing a parent's money is also a big sort of area of concern. And if I look at the trend of among people our age and their parents, a large chunk of money would be sitting in savings bank accounts with very poor interest rates, and it's difficult to sort of convince them to move the money otherwise. Their thinking is also that this is safe, why do I need more growth? But what is your point of view around this? Even with our parents' corpus, do you think at least some amount should be kept so that it's still sort of growing, beating the inflation, etc.?
See, there should be a mix. One, of course, we need to appreciate the mindset of our parents.
Yeah, of course.
So we have to allow some amount of money to be kept in the form of deposits,
Right.
which will give some comfort to them. But having said that, we can explain to them and look at other products. For example, in the fixed income part in the mutual fund industry, where we can tell them that yes, this money is being put in the mutual fund industry in fixed income. However, their investments are going to go into G-Secs, corporate bonds, which are AAA rated or AA rated bonds. So and the returns will be slightly better than what the returns you're going to get on the bank deposits.
Right.
Because ultimately the bank deposits are also going into these assets only. But only difference between the bank deposits and the mutual funds are, mutual funds is a pass-through. Bank deposits are going to be returned to you, the principal and the committed interest amount. Whereas in the case of the mutual fund, it is passed through whatever that I get from the market, I'll pass it on to the customer. Having said that, hybrid and the fixed income part are relatively conservative when compared to aggressive equity markets.
Right.
So we need to understand that for a parent's age, it's always better for us to go for a conservative product.
Right.
And that also, when we explain to our parents about this particular aspect, they too would be convinced.
Right.
As I said, there has to be a mix between the deposits, which gives them the maximum comfort,
Right.
and then something which beyond that, you'll have to invest in these areas, which will generate regular income to them, which beats inflation, and also whatever little tax they are required to pay, that also has been taken care of.
Understood.
So we need to have a balance between deposits and the mutual funds for a people of the higher age.
The other thing that I wanted to check with regards to, I guess, parents, I just recently lost my father, and the way he had managed his paperwork, it was quite easy to sort of figure out his assets, etc. Only after his passing did I realize this is not something that people actively think of. How do you manage? So people of our age, what do you think advice should be on managing our parents' money in such a way that, it's easily accessible for the next generation as well?
First of all, extremely sorry to hear about your father. Losing a parent is extremely difficult to thing. But today, both the regulators and the depositors / investors are, one, regulators forcing the asset management companies and the banking that nomination is something that is extremely important. Without nomination, in fact, SEBI has come out with a recent guidelines saying nomination is mandatory.
Okay.
In case nomination is not going to be done, the investor will have to give a recorded statement, video recorded statement, stating that he would like to opt out from giving this nomination. So regulators, asset management companies, everyone is taking this particular aspect as extremely important. Second, as your children like you and or the youngsters should tell the parents to have the proper will prepared. Assets can be given to anyone, but what are the various assets that are there, where they are located, how to access to them, and to whom they are willing to pass it on to them.
Right.
So a will has to be very clearly written and registered or not registered. I mean, registered will be much better so that things will be taken care. But having nomination at the same time, writing will is something that is extremely important.
Right. Moving from parents to maybe children, what is the right age, do you think, for children to get some sort of an understanding of financial security? When should we start talking to children about the idea of savings? What is the right kind of investments, etc.?
First of all, for the saving for a child, you should start from the age 0. I mean, for the day of his birth or his or her birth, you'll have to start saving for him or her. That's needed. And for imparting financial education to the children, I think it should start off from the 7th and 8th, 9th standards.
Right.
In fact, you would have seen that two things that we have done recently as part of our catching at young age. One, we have conducted all India essay competition for all students who are doing 10th to 12th standard. We conducted an investor awareness test essay competition across the country.
Right.
Second important thing is we have started a program called Tarun Yojana, where we will impart training on basic financial literacy for 8th and 9th standards in government schools.
Right.
And after doing this, we'll conduct a small test, and people who qualify, who are the top 10 students in the particular class, we will be contributing SIP to for them so that they get the habit of investing at the young age.
Right.
So two things we have done. One is conducting this essay competition. Second, this Tarun Yojana, which we're planning to do across the country. So literacy, financial literacy is something that we need to explain to them at the younger age itself.
Right.
The basics of fundamentals of finance. It's not that we're going to teach them about the various schemes and how to do it, but basic fundamentals will have to start at that age.
Another angle, I guess, is how can people like us help with financial inclusion? I guess, if you talk about people who work at our homes, let's say house help or drivers, etc., is there something that we can do to sort of, I guess, amplify the work that AMFI is doing?
Let me come back to your first question that you asked about our country going to a developed economy, the growth story and all. A country can be a successful only if there is a financial inclusion and financial well-being of all the citizens of the country.
Absolutely.
And that is something that we need to ensure. When I'm talking about financial inclusion, financial well-being, we'll have to, the goals that we're talking about, people about the financial security that you're talking about, financial resilience, all these things, it will be nice while the AMFI and the other MIs institutions and other institutions are trying to propagate this financial education. It will be great if educated people like you also do it for your people who are working there. Tell them that you start investing. And more importantly, we'll have to tell them that invest first and then spend later. Saving is first something which is extremely important, which of course Warren Buffett also did mention.
Right.
The same thing.
Right.
That save first and then spend later. So have your goals first, save for those goals, and then start spending.
Right.
So this aspect, be it as a institutions that we try to propagate across the country, be it as an individuals like you, telling the people, would ensure that we have the financial well-being for the entire country.
Would you want to talk a little bit maybe about the Choti SIP? Because I thought that was something which is really good for somebody who doesn't have too much means but could still get into the investment market.
Because the beauty of this mutual fund industry is you want to diversify your investments. You have a small amount, but you're looking at large corporates where you want to invest because the success story is there in the large corporate or mid corporate or small corporate, whatever it is. And then you want to get the benefit of the success of these particular growth story of the country, but you have a small amount to invest. Still you can do it because this mutual fund industry is what collects the money pools the money from the various investors, and then they invest into these large corporates.
Right.
And the beauty of this is, as you rightly mentioned, is we have brought out a Choti SIP, which is for 250 rupees.
Right.
Which helps the people, even the poorest of the poor, smallest person also,
Right.
can start investing into the mutual funds and be a part of the growth story.
Right. And you were saying that it's also now possible to link UPI to it so that it's very
recently
easy.
That has been introduced.
Okay.
And you can give a mandate, which automatically your account gets debited every month, 250 rupees or whatever frequency that you set in for.
Right.
And the account is debited and transferred to the particular AMC.
Right. I think that's a really good move because now people have gotten used to UPI as well.
Exactly.
So it should be very, very useful. Taking a little bit of a left turn now, let's talk about your vast experience. One of the things that I wanted to understand from you is you worked with SBI for such a long period, and it's an organization which stands strong for more than 200 years. Are there any learnings from the organization that you've applied in your own life, which is how do you stay relevant over such a long period of time?
Yeah, I mean, I take pride that you are an SBI.
Yeah.
The moment you talk about SBI, the goosebumps come to me. So it's something which I take really pride of.
Yeah.
And one thing that we learned strong is continuous change.
Right.
Organizations survived in so many years, more than 200 years, is because we adapted to the change. We continuously looked at what's happening in the environment and we changed accordingly.
Right.
And within the veins of all of us, within the DNA of each and every employee, something that is ingrained is a trust and transparency.
Right.
The trust is something with the people, the culture of the organization is so ingrained into all of us that for us, customer is more important. The satisfaction that you get from serving to the customer is immeasurable.
Right.
You would have seen some of the chairmen talking about the salaries which are paid to this chairman when compared to the salaries of the private sector bank. Same is true with all the top executives of the bank as well, or any employees of the bank
Right.
as well. But the satisfaction that I get is something much, much more.
Right.
It's immeasurable when compared to what material money that we get.
Yeah.
And that is something that is given us to work in that organization for 37 and a half years, which I worked,
yeah.
and I still cherish those memories. To give you a small example, I mean, it helps you to learn everything. And that is one organization where I could finance 5,000 rupees and 5,000 crores as well.
Yeah.
I mean, a small Buffalo in a small village and a Boeing in
Right.
US.
Right. That's very, very impressive. Like you said, you spent 37 and a half years there. Any people or instances that come to your mind which has served as inspiration for you pretty much for your entire life?
First and foremost, inspiration was my mother, because she's a teacher, and the dedication, the timings, and the discipline that she formed.
Right.
That has gone ingrained into us, and that's what has driven me for the entire 37 and a half. That is something that has driven me in this organization to move. And there are many leaders whom I followed. I mean, there are my people who, like Arundhati ma'am, who was the chairperson of State Bank of India, where I worked very closely with her.
Right.
Then Mr. Bhatt, Mr. Sriram, who was the managing director. We have seen these people, the ethics that they follow, the principles on which they stand for, the discipline they have, the integrity these people have carried upon.
Right.
That is something that has passed on to us, and we try to pass it on to our juniors as well.
Right.
And that gives an immense satisfaction when you're working. That's something that is driving the institution today as well.
Yeah.
I mean, for so many years, and it's going to survive for many more hundreds of years.
Yeah. That's actually the next thing that I want to check with you. You worked for 37 and a half years and now you're heading AMFI. What is it that drives you? And I've heard you speak very, very passionately about Viksit Bharat. What is it that drives you even at this stage of your life to work so hard, to stay meaningfully engaged?
See, as I said just a while back, that we financed a buffalo. And that particular point of time, I used to visit small villages in Chhattisgarh, where the population is, where I stayed had a population of only 900 people. And we never had electricity. Those were the days. Of course, today it's totally different. But we were very passionate. We used to go to the small villages, finance IRDP loans, buffaloes, bullock carts, used to finance small kirana shops, and then see to it that these people repay and take a better loans.
Right.
So when these people are prospering, and when I can make a small change in their life, it gives a satisfaction to us.
Right.
And that satisfaction is what is driving me even today.
Right.
Because this organization, while we are looking for the development of the mutual fund industry, at the same time, financial literacy, which we campaign, which propagate across, go around various places and do it, that gives me much more satisfaction. Because we are trying to make more people literate, financially literate, and in turn lead to the whatever small that we can contribute for the development. That passion is something that is driving me now.
Right. Taking a little bit of, I guess, change in tack, I've also heard you speaking at conferences largely about the tectonic shift in our society now, with, if you think about, obviously, the geopolitical angles as well, black swan events, or the role of AI. So AI is coming in. We hear so much about how AI will take away people's jobs. So there's just a lot of flux that's happening. And I also sense a lot of nervousness in our generation about dealing with so many changes. What would your advice be to sort of, how do you navigate this complexity?
Yeah, I agree with you that AI is going to be disruptive. Even today's newspaper talks about Amazon trying to, they're saying that there will be some people will be removed from the jobs. There'll be a reduction in the number of people, employees in the organization. That keeps pressure. But trust me, while the technology changes have happened, we have seen many events happening. And whenever such changes happen, there is a creation of jobs.
Right.
There would be creation of alternate jobs are definitely going to be created. All that is important for all of us is keep learning.
Right.
Learning is a continuous process.
Right.
And we should keep ourselves abreast of the latest happenings. As long as you're keeping ready, it doesn't matter whether you lose one job, but there is something else which is ready for them to pick you up.
Right.
So keep yourself learning, keep yourself abreast of the latest happenings. Don't worry that there's something is going to be disruptive, there'll be something else that is going to be created, and then the job will continue. And the point that you rightly mentioned, you said that there can be one black swan event in your life, but I've seen so many black swan events in my own life itself.
Right.
So don't worry about that. You be calm and quiet, but keep learning.
Right.
And that is ultimate. That's going to help you in the long run.
Right. I think that also links back to the point that you were talking about SBI, that it's been relevant for so many years simply because it's been adapting.
Adapting and changing as per the required circumstances.
Right. So we spoke, I guess, a little bit about what could be the potential downsides of technology and advancements. I was also recently reading in an article somewhere in the West, I don't remember where, that financial markers, like an anonymized financial markers, like number of times somebody has logged in, somebody, how much spend they are doing on travel or hobby, that's going down. That has actually been used to identify cognitive decline before, you are able to formally identify it. Do you think there's scope for something like this in India in an anonymized way, obviously looking at consumer privacy and all of that?
No, this is an excellent mechanism in which you will be able to identify Alzheimer or any other diseases that are there.
Yeah.
It's an excellent idea. I mean, because as you grow old, there's a possibility of, forgetting the passwords.
Right.
Therefore, you try to attempt many number of
That's
times.
right. That's
and
right.
then you commit mistakes and a whole lot of problems there.
Yeah.
So this can be used so that you can detect early at the early stage and then do the preventive measures that are required to be done. Having said that, the more important thing, again, the point that you rightly mentioned was about privacy.
Right.
And misutilization of this particular data.
Right.
While I know that somebody is doing it 3 times mistake and then there is some issue, and if this information is leaked and somebody gets to know it, he may misutilize it. So there is a need for us to have the proper controls in place.
Right.
And use it for the preventive purposes.
Right. Thank you so much, Venkat sir. Before we end, I think I have one last question for you, which is, being a banker, you've spoken a lot about financial investments, but in life, if you were to give advice on what are the key investments an individual should focus on to live a good, meaningful life, what would those be?
Set your goals properly. Set your goals properly. Understand what your goals are. Once you set your goals, then you say that how much do I need to save? Remove that first savings, then only spend. That saving, look at the goals, how am I, and that look at the time horizon for which you're looking to achieve those goals. Then you look at the products that are required to be done. Don't first say that somebody is giving a 25% return, I'll start taking that particular product.
Right.
Please don't do that. My sense is each individual will have his own priorities. You have a different set of requirements, I have a different set of requirements.
Right.
We cannot say that just because you are doing it, I should copy it and then follow you.
Yeah.
Absolutely not.
Right.
We'll have to set our own goals. We'll have to look at what are requirements and I do as per my requirements.
Right.
That is the principle in which we should follow. Then only we'll be successful.
And what about things like broader life goals, like investment in health or knowledge? What about something like that?
Investment in knowledge is non-negotiable. It has to be done. Investment in knowledge, health is wealth. Health is absolutely required. And therefore, insurance is something that we need to go for it.
Right.
We need to see to it that insurance product is there for us to take care of our health requirements.
Right.
Because there are contingencies which you have seen. COVID is something that which has hit us very badly. People are required to, they have sold their house in order to protect themselves, save themselves.
Right.
But if insurance is something that is important, to see to it that you are protected, and an emergency fund that is required so that you can take whatever decisions we want to take without being worried about your financial security.
Right. Thank you so much. It's been such a pleasure talking to you. And hopefully we'll stay in touch. Thank you.
Sure. Thank you so much. Thanks a lot.
Thank you so much for tuning in. I look forward to your comments and feedback. Before you go, can I ask for a favor? If you like the show, would you consider subscribing? It's an easy way to support us. And we promise to keep doing what we're doing and try and do even better. Thank you.